Good afternoon, everyone. My name is Eric Oberto. I am the Director of Investor Relations here at Hornet Capital. I want to thank each and every one of you for being here today. I know it's a work day and I know you've got stuff to do. So my promise to you is that we're going to bring you a lot of great content, but we're going to do it precisely and we're going to do it efficiently so that this doesn't run very long. I do encourage you to stay till the end. I have some extra tidbits and info that I'm going to present to you at the very end. So stick around and we'll get to it. It'll be worth the wait, I promise you. Also, a couple of things. There is a chat box here. So if you have some specific questions for us, go ahead and just load up that chat box. And we're going to get those questions answered for you. But in the interest of time, because it is a work day, we don't want to slow everyone down answering a bunch of questions. So we'll reach out to you personally, get your questions answered exactly, and make sure you have what you need. So feel free, load up that chat box with questions. We'll get them all answered for you. For those of you that don't know a lot about Hornet Capital, I'll give you just a brief overview. We are a private hard money lending and investment company based right here in Austin, Texas. This is where our primary focus is, and we have our thumb on the pulse of all things Austin, Texas. For the past 5 years, we've had a tremendous amount of success and growth, and it's all been through word of mouth. We're a private company. Referrals and word of mouth have gotten us to where we are. And this common recurring statement with our new clients is basically they say this. They say, I wish I knew about Hornet sooner. We've heard that so many times that we decided we should start reaching out and extending the olive branch to everyone out there so you can get to know us a little better and see what we're all about here at Hornet Capital. As a disclosure, though, just knock some legal stuff out of the way. This is not intended to be investment advice, lending advice. Heck, this is an advice period. We are not giving you any sort of legal advice. This is our opinions, and we're presenting them to you behind the curtains and making that information available to you here today. So just get that disclosure stuff out of the way. This is not legal advice. Now, today we're talking about the volatile real estate market. And if you haven't been living under a rock, you're probably pretty aware that it's been a volatile real estate market for several months now. And investing in a real estate market like this can be difficult if you know what you're doing. It can be difficult if you don't know what you're doing. So we have a unique treat for you here today. We have none other than Brian Witten, the CEO of Hornet Capital. He's going to give you his behind the scenes strategies and tell you what he does and how we invest into a volatile real estate market. So get ready because the good news is coming and I think you're going to enjoy this. So without further ado, I'm going to go ahead and introduce you to our CEO, Brian Witten. Go ahead, Brian, take it away.
Well, that's definitely the most professional introduction I've ever had. So, and you were by far more energetic and exciting than me. So thanks, Eric.
You're welcome.
Hey, everyone, Brian Witten. Most people probably know me that's on this, but I was a Navy graduate, got to go fly F-18s for 20 years, or I got to go fly for 20 years, flew F-18s for a while, and then been doing real estate ever since. And so one thing that I've realized is that it took, for me to get to where I am today, it took a lot of mentors and advice. And so today I'd like to kind of give back some of the things that I have learned. This is not going to be your normal presentation. I am terrible at putting together PowerPoints and even worse at presenting them, but hopefully I get my idea across to you guys so that you guys can take it and move to the next level of your education, your training, and eventually what you'll be investing in. So let me go ahead and share my screen and hope I don't screw this up while I do it. Eric, can you give me a thumbs up if I'm sharing the right screen? All right, got the thumbs up. All right, so presentation today, it's a super volatile real estate market and how can you guys invest in it? So before we talk about very specific the real estate market, what I'd like to talk to you guys about is kind of a mind shift. So the first thing, if I can figure out how to switch slides, is I think we've all seen this. You know, they call it the 1%ers, that they own a majority of the wealth in the United States. But even if we break that down to the 5%, we'll see that a majority of Americans are actually not wealthy. And probably of those 5%, most of them probably inherit that wealth. So, only 1 to 5% of Americans truly know how to create wealth. And I think we all know that a lot of that wealth is created through real estate. So with that thought, let's go to the next slide. And this is a very nerdy, complicated math slide. But what I do want to point out here is when I look at the 95% of Americans that are not wealthy, you can see that's a big, large portion in this bell curve. And there's only a very small portion at the very tail end of this where people are, making wealth and doing very well for themselves. So what I want to do is put those two concepts together and say that the majority of Americans are actually wrong. So when you guys are listening to information, majority of it's wrong, and you're forming wrong opinions on it if you want to be wealthy. All right, so with that, let's try to fix this. So the first thing I want to let you guys know is stop being a target. And what I mean by that is we feel as, Americans, as we're consuming our day-to-day stuff, that people are looking out for us for our best interest. What I want you to know is that, Wall Street's not being paid to be right. They're getting paid for you to invest your money in whatever they're promoting. The news feeds, the same thing. They don't care about being right. They care that you click on their articles. They care that you listen to their podcast, because that is what helps their numbers. That's what helps their salaries. And so what I want to do is try to train your mindset that what you should be doing is you should be looking at the fundamental data yourself and making your own opinion. Here's just a quick example that if I was Jim Cramer and I was, saying how bad a stock this thing was, you could see that I could make, 10 different opinions on why this is a bad stock. And then if I was Jim Cramer, I could make 10 different opinions why this is a great stock, right? But, obviously it's the same company. It's Apple stock. It just depends on what timeline I put on it. But it's very easy to manipulate that data to spin whatever story that I want to talk about Apple that day. And these are actually graphs from today. So you can see the sense have changed a little bit just when I was taking the screenshots. All right. So now that I have your attention and kind of making you understand that, most people and most opinions are wrong if you're trying to become wealthy, I'm going to show you an example of it specifically for, what I did with Hornet over this past 6 months. And so what I did was I started looking at real estate data. And so this is from the National Association of Realtors. But what I was looking at was more for the data and not for their opinions. It's very easy to understand that the National Association of Realtors, they want to promote real estate. So they're going to only tell you great things about real estate. They're not going to tell you that the world's coming crashing down. But when I look at the National Association of Realtors and I look at mortgage rates, what I found was when I'm reading this is that the economy is in a pretty stable place. The National Association of Realtors saying that they expect the new normal for mortgage rates to be between 5.5 and 6.5. Right now, if you look at this, it's at 6.8. Payroll's doing well, unemployment's super low, it's lower than it's ever been. And so I start to take in that data on a day-to-day basis. If you look at wages versus how consumers are doing with the, on an every day-to-day consumer price, you'll see that this is growth. So what you'll see is that for the most part in the orange, you'll see that wage growth has been fairly consistent, but the price for consumer goods has slowly gone up. Previously in 2019, 2020, you can see that the wage growth was more than the consumer price, and now the consumer price is more than the wage growth, which is obviously what we're seeing right now is with inflation is outpacing wage growth. When you look at what I want to bring to point here is to talk about where mortgage rates will be, because obviously mortgage rates are playing a big part of what's going on right now. And so this is actually a graph that I put together. You're not going to find this in too many other places, but what it does is it takes the 10-year treasury yield and it takes the 30-year fixed mortgage rate, and it compares them. And you can see for the most part, those gray lines, they're for the most part in lockstep. But what the orange line is the difference between those two. And so you can see it's fairly consistent there around the 1.7 or 1.8, somewhere in there. That's the average difference. But what you'll notice is in 2008, 2009, at the real estate crash, there was a big spread. And what that was saying was basically Wall Street was willing to pay, wanted a much higher yield for mortgage rates than they would for a 10-year treasury. And what we're seeing is that's now happening again, and that there is a large spread. And if we look at the history of the past 20 years, that spread should come down. So that's going to mean one of two things. Either the treasury bond yields are going to keep going up, or the mortgage rates will come down to meet the treasury year bonds. So this is something that I look at to note when I'm comparing this data, I'm recognizing that right now I expect that the spread on mortgage rates is really high, and it does have a chance to come down as long as the treasury yield does not keep increasing. So we saw earlier that the National Association of Realtors thought that mortgage rates were going to be between 5.5 and 6.5. When I look at this data and I'm looking, the Feds are saying that they're expecting, maybe another 0.5 point raise. To me, when I look at mortgage rates, I think that's going to be between 6 and 7. I think that's going to be kind of the new normal through 2023. And we saw earlier that right now it's at 6, it's just over 6.5, I think 6.6. So that helps me feed into where we are with interest rates. I keep looking at, national data and saying, okay, on a big national base, since I invest here in Austin, where are people moving? And so U-Haul comes out with stats every single year, and they're still saying that the number one place that people are dropping off U-Hauls and not picking them up is Texas. And so I know people are still moving to Texas even in 2022. And obviously Austin is one of those, one of the 3 or 4 biggest cities in Texas where people are going to keep moving to. So the trend is still going in the right way for Texas. What we can see here is this is when I'm looking at permits for Texas specifically. And so the biggest thing that I noticed is that there was no new permits in December for single family homes. So what does that mean? Obviously the market was coming down. Builders are getting scared and they don't want to be left with excess inventory. So they basically said, hey, I'm going to pause. I'm not going to build right now. And so you can see in 2022, the total number of permits is down for almost a 3-year low. I look at single family homes and I look at how does Texas compare to the overall US. Now, this was very surprising because if you look in the red on the top graph, you'll see that Texas was barely affected during the real estate crash of 2008. The rest of the US in blue saw a big downturn. So what did that do? That gave everyone a lot of confidence in Texas and specifically in Austin, and myself included. When I was looking at the data, I said, man, even if there is a downturn in the real estate market, Texas and Austin's actually, shielded from that, just like we were in 2008. And so I went into 2022, 2023 with a lot of confidence. But what we found was, history does not just repeat itself. So you have to keep looking at real-time data to see what's going on. And you can see that the difference here is actually Texas, and specifically Austin, if you look at the bottom graph, are actually leading the nation down. And the reason is because we are such a hot city that we led the way up, and now we're leading the way down because we were, in a pricing bubble at the time. So this is the graph when I put together, when I pull all the MLS data for Austin from 2013. And I kind of pieced this together based off some significant milestones. So you can see that on an average, you can see that there's nice consistent growth from 2013 until the Fed starts printing money. So the Fed starts printing money, obviously because of COVID, and they need to stimulate the economy. And that gave everyone a chance who wanted to move to Austin to move to Austin. When they did that, they took all that new Fed printed money and they put it into real estate, and our prices started to go crazy. The second thought that you'll see there is that the Fed starts to increase the interest rates from 0 to 4.75 because they realize that the economy is overheated. There's too much inflation going on, and it's time to cool things off. There's already some houses under contract, and so those contracts went through for the next couple months, and then the effects from the Fed turning on or increasing the rates start to dramatically affect what's going on. And then all we heard for the next 6 months, all the media, all the markets is saying that in 2023, it's going to be the biggest real estate crash that we'll ever see. What I saw when I was looking at the data real time was that, yes, there was a crash happening. And I am going to use the word crash because you'll see that there's a 22% drop. But what I realized was that everyone was predicting the crash to happen in 2023. And what I saw was that we already had the crash. And so throughout the last portion of 2023, I engaged 170 realtors. We went out there, we made over 10,000 offers. We got 1% to respond to us. The other ones just gave us the middle finger with the offers we were giving them. And then, of course, a couple of those we were able to get deals through. And these were turnkey properties that we could buy at a massive discount. Obviously, not only a 22% discount from the highs, but we weren't making market offers. We were making well below market offers because everyone else is still expecting from the news media that they're hearing that the market's going to crash in 2023. So they think they have to sell now, and they're willing to sell at a discount because of everything that they're hearing. So I can tell you that we were buying properties probably closer to that where that orange line finishes. So buying properties back from when the Fed started printing money. And so if you were just looking at this as a stock market where you could buy in and sell at any point you want, yeah, maybe you can make some money if you're buying at these lows and then selling at the highs. But what if I could buy into a stock market and I could buy a 20% discount below that white line and then sell the same day for on the white line? Everyone would be doing it, right? And so this was an opportunity with the market coming down and looking at all the data that I was looking at, all that stuff that I showed you where the employment was doing well, the people are still moving here, and just all the statistics were looking very strong. We were just in a weak market because of the increased interest rates, but then we were also in a weak market because it was the fall and winter is usually the slowest time for real estate. So you put those together and the tide really pulled back for buyers. And when I was looking at the data, I knew that this was an opportunity, probably the greatest opportunity I would see in Austin to go buy a bunch of property. And so that's what we did. We went and bought that property. And sure enough, in January, things started to tick up. And why is that? Because the strength of the jobs are still here. People are still moving to Austin, and there is low inventory. We saw that not a lot of people are selling homes right now because they don't want to sell their 3% interest that they have in their home to go buy a new home at 7% interest. We saw that builders aren't building right now because they're just trying to get rid of what they already have. So, and we are already at a low inventory for, historically, since what's going on. So with very, very low inventory, even though there's not nearly as many buyers because we don't have purchasing power, it's still going to stabilize our prices. So that's why we went out and bought a bunch of properties. Now, I'm not saying all this to brag. What I'm saying is the reason I was able to do this is because I was looking at data in real time. I was not watching my YouTube clips. I was not, listening to all the news and podcasts talking about what's going on. I was focused on the data specifically and really seeing if it was a good time to buy, and if it was, let's jump on it. So with that being said, I want to try to help everyone else that's listening to this on how you can do something like this. All right. And so I'm going to break it down into two types of investors. First, there's the active investors. Okay. The first thing I want you to do is assume that everything that you are seeing is wrong or deceptive. You are being that target. People are trying to sell you. They want you to invest in something. They want you to buy what they're doing. They want you to read the article. And so just realize that when you're reading, they're trying to deceive you to get what they want out of you. All right. So then what I want you to do is I want you to go start finding data sources. Okay. And so that I'll scroll back here, but you can see I'm looking at the Texas Real Estate Research Center, right? They're not trying to sell me anything. They're just putting data out there. If I keep going back here, U-Haul, they're not trying to sell me anything. They're just putting this out there as data. More put together your own graphs, right? And your own ideas like I did here. Look at, mortgage rates daily and start to come together to find where you can seek the truth in data so you can start analyzing it yourself. Once you do that, you're going to start to form your own opinion. And I could tell you it's very difficult to form your own opinion, especially if it's counterintuitive to what everyone else is saying. You're going to start to doubt yourself. But I want you to do is trust that data, trust your opinion. And then what I put here was to try to prove yourself wrong. Because once you have your opinion, people are going to start spitballing at you different ideas. And you have to be able to say, hey, this was a good opinion, and here's why. Or you're going to have to be able to back it when people start throwing other ideas at you. So that's for active investors. For passive investors, I have much different information. So what I want to say is you need to go find operators that you can trust. And the reason is most operators out there, or most investments that you are investing in, you probably found out about them because you saw an article about them, or they were at the top of the Google or whatever. And so what I want you to realize is there's people that market investing opportunities, and there's actually operators out there just doing hard work and making that happen. So go find the builders that are out there building and find a way to partner with them. Go find the people that are out there managing their own wealth and see if there's a way to partner with them. And don't just respond to stuff that you see in articles and stuff like that, because just like the media trying to pitch stuff to you, their job is not to be an operator at that point. Their job is to sell you into their operation. So just be very wary of it. And so what I put here is you actually can't be passive until you actively find someone you trust. And it's not going to be easy to find 1, 2, 3, 5 people that you can trust, that you can turn your investments over to. And so, talk to your friends and your family about people that they've invested with, other mentors that you've seen that they've been successful, and find out who they're partnering with. And so, like I said here, be active first before you can be passive. And then follow what's going on with your investments, because I could tell you, especially in this volatile real estate market, things change overnight. People have, they will die on their swords trying to say, hey, this is the only way to invest. And that's how they got you to invest. And then even if things turn against that concept or that idea, they will continue to die on that sword. So be able to find operators that can pivot, or pivot yourself, right? Realize when that operator or that investment's not a good investment and get your money back. And even if you have to sit in cash until you find the next best investment, or you can actively find someone to passively invest with to do that. All right, so that was just a very quick, putting Brian's brain on a ugly PowerPoint for you guys. Just to try to change the way that you guys are thinking, to realize that most people are marketing to you. And if you want to do great investments, you have to do the hard work, even if you're a passive investor. I think did I end that the wrong way?
I think you're ended just fine there. I got you. Thanks, Brian. Appreciate you very much. That was great information. I hope that everyone out there got a chance to use it, or was going to get a chance to use it. And speaking of that, so as part of the fact that you guys are here today and we went through some information, there's some things I want to go over with you. So I'm going to be reaching out personally, and I'm going to send you the actual slides that Brian just went over here, so that you can have that information to sort of study a little bit. So one of the things he said about creating, your own graphs and finding your own sources, it's really good advice. It really makes a lot of sense. So I'm going to give you the basis of what we have here. So, because you probably didn't memorize everything on those slides, so I'm going to give them to you. Also going to show a QR code here in just a minute that will basically link you directly into our Calendly, so you can get on my calendar, Brian's calendar, and you can talk to us directly. Because one of the things that Brian was talking about, his strategy, well, we also have a new fund called the Hornet Real Estate Fund, where he explained how he bought those homes, and there's opportunity to participate in that fund passively as well. In addition, I'm memorize my email. It's eric@hornet.capital. Again, ERIC@hornet.capital. When I send you those slides from this presentation, I want to make sure that I don't end up in your spam. So put me as in your address so you can get those slides. That information is important. I want to make sure you get it. And in the future, be on the lookout. Go to our website, hornet.capital. We will have a lot more stuff coming out. Monthly newsletter, monthly video updates. Our social media pages are all getting makeovers. We're going to start actively putting more of this information out there, so it's more accessible and available to you, because we kind of got tired of hearing about that. People wish they would have heard about us sooner. So we're going to make sooner right now, start getting that information out regularly. We're going to make ourselves available. We're going to be there for you to answer questions. And who knows, maybe you'll want to partner up with us and get involved in some of the stuff we're doing. It's up to you, and I'll leave it right there. I'll let you all get back to work. We thank you for being with us today. Have a wonderful rest of your day, and we'll be speaking soon. Thank you very much. Take care.